All right, guys, so it is finally time for strategy number one, the initial breakout, or I'm also going to reference it as simply the IBO, the initial breakout. So this is one of the simplest strategies that we have. It's very simple to execute. It's also very simple to find and identify, but it's a very good strategy. It can be for short-term trading. It can also be utilized for longer-term type of trades when it comes to catching the run. Now, out of all the strategies, this strategy actually focuses on the beginning section of the run, the beginning of the trend as well. So we're literally focusing on a few different things. We're going to be utilizing the basics, such as horizontal support and resistance levels, trend lines, Fibonacci retracements, 50 EMA. But we're also going to be utilizing multi-time frame analysis. We're going to be focusing on the daily, 4-hour, 1-hour, maybe even the monthly, maybe even the weekly, and so on. So we'll be conducting the full multi-time frame analysis when finding and executing this strategy. We're also going to be focusing on the Elliott wave theory. This strategy focuses on catching wave 3 of the Elliott wave theory. So you guys know wave 3 is one of the largest waves, one of the largest parts of the trend as well, right? So that is what's good about the strategy, is because it catches wave 3 run, which again gives us the possibility for quite a bit of profit as well when utilizing the strategy properly. So it is one of my favorite strategies. It's also one of the first strategies that I started utilizing myself as well. So with that said, let's have a look. All right, so like I just mentioned, we're gonna start off with focusing on the multi-time frame analysis here, but also utilizing all the tools that we have already learned, from trend lines to support and resistance levels, horizontal or the 50 EMA, to the Fibonacci retracements, Elliott wave theory, all that good stuff. So when we start off finding these trades, we typically start off by looking at a certain time frame, such as the daily chart, maybe even the intraday charts, when you understand what the pattern is. Doesn't really matter where you start. You can start off on the lower time frames, or you can start off on the higher time frames, right? So in this lesson, I'm going to focus on the explanation of what this strategy looks like. I'll try to go through all the different points, the characteristics of the initial breakout of this IBO strategy. In the next lesson, we'll actually focus on the execution of this strategy. So when it comes to the explanation, let's have a look at the higher time frames first. And it's the same type of layout that we have seen before. So on the daily chart is on the bottom, the monthly is on the top left, and the weekly is on the top right, right? So we're going to start off with full multi-time frame analysis. And when I start off by looking at this daily chart, right, the first thing that I see is this beautiful deceleration that we're getting here. So obviously this is a run, or it's just a bullish run to the upside, or maybe a pullback within this trend. It is hard to identify whether we're trending or what's going on over here. So the way I'm treating this is simply as a pullback, a bearish move to the downside that I'm looking to capture here. But the first thing that we need to have is some kind of major support and resistance level that we're rejecting. Whenever we're trading, whenever we're finding these setups, well, it doesn't matter which strategy it is, we want to make sure that the higher time frames have some kind of a support and resistance level, whether it's horizontal, whether it's the 50 EMA, whether it's the Fibonacci retracement, or a trend line, and so on. In this case, we have a horizontal level. And when we zoom out, you can clearly see, let's zoom out a little bit more, that this level has been acting as horizontal support and resistance quite a few times here. So number 1, then we have number 2 over here. Let's zoom in a little bit closer. Number 3, number 4, number 5, this general region, number 6, number 7, and now we're at number 8. So roughly 7 to 10 rejections in the recent times. There's more rejections even if we go farther. So this is a pretty good level. It is not major, simply because it is not rejecting the extreme highs, right? So this level up here, I would, as an example, would be a major level because it's the extreme highs. But in general, this area still has 10 rejections, which is really good, right? So we want to make sure that, again, when we're looking at these horizontal levels or any kind of support and resistance level, that there's at least 3 rejections, right? So we're focusing on at least 3 rejections, and this is exactly what we have here. We obviously have more than 3, but we're rejecting this level. So that's the first thing that we look for. First thing is, do we have support and resistance? And in this case, yes, we have horizontal support and resistance. Perfect, right? That's the first thing that we want to see. Number two, do we have deceleration and candlestick formation that's telling us that there's going to be a reversal? The thing is, yes, so check it out. Obviously, we've been accelerating to the upside here. Candles are pretty big, so we're accelerating. And then the candles are getting smaller. So we're starting to decelerate, specifically around this area here, which is again 99.2 or 99.25, which is that horizontal level of roughly 7 to 10 rejections. And then we get this deceleration of a high test, this doji type of candle, and a bearish high test. So we're pretty much forming what? A tweezer top reversal pattern with deceleration, rejecting horizontal resistance. So that's the first two things that we need. Support and resistance, candlestick formation, telling us that that support and resistance level is being rejected, right? So candlestick formations, reversals, right? Specifically, we're focusing on reversal setups. So in this case, we have this tweezer top reversal candlestick formation. Great, right? So obviously we're looking for a short move to the downside, playing the pullback, right? So we're just playing the pullback here. Now, we want to have a look at the higher time frames, such as the weekly, such as the monthly, to see how much potential there really is for this bearish opportunity. So obviously on the daily chart, we have this bearish opportunity that we're looking to capture. But from a higher time frames, monthly chart, let's have a look. Monthly chart is actually kind of bullish, right? So when you looking at the monthly time frame, we have this low test rejecting the monthly 50 EMA. In general, it's kind of ranging sideways, so I don't really have a bias on the monthly chart. So nothing there to consider. On a weekly time frame, do we have any bias in our favor? Not really. We're just accelerating to the upside here, so we don't really have any bearish kind of bias. Maybe I could draw in a trend line. Let's see. It's still not being rejected. What about if we connect the highs? Still not being rejected, right? So in general, we don't have any bias on a monthly. We don't have a bias on a weekly. So simply, this is just a daily pullback without any higher time frame confluence, right? Just a simple daily pullback, which is fine, right? But let's summarize. What do we need? Support and resistance, candlestick formation that tells us that that support and resistance level is being rejected. In this case, we have a tweezer top reversal pattern on this daily chart. No weekly confluence, no monthly confluence, simple. Now we move on to the lower time frames. And on the lower time frames, this is actually where the strategy really shows itself, right? So on the daily chart, we identified the beginning of a pullback or beginning of a run simply by looking at that support and resistance level and looking at the candlestick formation. We're identifying that a run is beginning, right? Now from a multi-time frame point of view, if you guys remember multi-time frame analysis, a run on a higher time frame is what? It's a trend on a lower time frame. So if a run on a higher time frame is beginning, a trend on a lower time frame is beginning. Pretty simple, right? So a run or a pullback, same thing. A new move on a daily chart is beginning, right? Because of that support and resistance level and because of that candlestick formation, tweezer top. So now we need confirmation. If a new run is beginning on a higher time frame, a new trend should be beginning on a lower time frame. So that's what we look for next. The next thing that we look for is, I would like to come down to the 1 hour chart. Do we have a break and retest of the 1 hour 50 EMA region? Simple. That's number 3, characteristic number 3. Do we have a break and retest of the 1 hour 50 EMA? Yes, we do, right? So let's dig into this a little bit farther. Trend change, right? Obviously, we have been in this bullish trend here on a 1 hour chart. And then right here, we started to decelerate, forming a triangle pattern, an ascending triangle, connecting the extreme lows. And then you can see that we have this double top price action pattern right here, right? So we have this ascending triangle that has developed. Then we had a breakdown, lower low, previous lows over here, right? All of a sudden we had a lower low. So that is our first sign of a trend change. So do we have a trend change? Yes. So is that daily tweezer top confirmed? Yes. A run on a higher time frame is a trend on a lower time frame. We had a lower low. That is the first sign of a trend change. So then what we're looking for is the break and retest of the 1 hour 50 EMA. That is what an IBO is. IBO is pretty simple. right? Meaning that on a higher time frame, we have some kind of a rejection of some kind of support and resistance level. And then on a lower time frame, specifically the 1 hour chart, we have a break and retest of the 1 hour 50 EMA, right? So this is how it will be executed as a day trade, right? If you're a day trader. Simple break and retest of the 1 hour 50 EMA, catching that higher time frame run with the lower time frame trend. Now, when you focus on the Elliott wave theory, what is this? Wave 1 breakout, wave 2 pullback. So we're catching the wave 3 run, right, on the 1 hour chart. That's where we're beginning. We're beginning the wave 3 run, and that's what we want to capture, right? So that's pretty simple. That's really the basis of an IBO. But now let's have a look at the 4 hour chart. On a 4 hour chart, we just want to make sure that the 4 hour chart is not against us. We don't want the 4 hour chart to be against our bearish bias here. Obviously, the daily chart is bearish. The 1 hour chart had this bearish breakdown and retest of the 1 hour 50 EMA. So we want to make sure that the 4 hour chart is bearish as well, of some sorts, right? Sometimes that's going to be a double top, a lower low, a lower high, a head and shoulder pattern, or a simple phase line break, right? So in this case, we have this break of this trend line or a phase line. These smaller kind of trend lines, they're also called phase lines. And this would be like a larger trend line, and this is a phase line. But this phase line is simply also this trend line here on the 1 hour chart, right? So same kind of thing. And we had this breakdown, lower low, lower high, kind of a double top or a triple top price action pattern that developed here on a 4 hour chart. And then we had this breakdown. So we do have bearish bias. So this is kind of what we have, right? Step 1, do we have resistance on a higher time frame that we're rejecting? Yes, we do have resistance. Is it good? It is good, right? It's a pretty good level with over 7 rejections. Number 2, do we have candlestick formation on that higher time frame that's telling us that that level is being rejected? Yeah, we got deceleration and a tweezer top reversal setup, right? So good. That means that on a daily chart, a potential new run or a new pullback is beginning because that level is being rejected. Step 3, do we have a trend change on a lower time frame? Specifically, right? This is specific. Do we have a break and retest of the 1 hour 50 EMA? We do, right? And then the step number 4, does the 4 hour chart confirm our bearish bias? Yeah, I mean, it's not bullish. That's the thing. We don't want the 4 hour chart to be against us. So in this case, yeah, it broke down, broke the phase line, had a little triple top and a lower low that developed. Simple. Now, when we dig a little bit deeper into it, Fibonacci retracement, right? We also typically with an IBO, 0.382 Fibonacci will be somewhere around this general region, the 1 hour 50 EMA, right? So breakdown and a pullback to the 1 hour 50 or a breakdown and a pullback to 0.382 Fibonacci retracement, which is again, this red level down there. So this is what typically what it looks like. Breakdown, pullback, rejection, we go short. Now on a 5-minute time frame, we're going to be focusing on the execution in the next lesson. But on the 5-minute time frame, we're just replicating the Fibonacci retracement level, same as on the 1 hour chart from the previous high to the previous low, right? So this is the same Fibonacci level as on the 1 hour chart, just duplicate it. And we mainly want to be entering somewhere around that 0.382 Fibonacci retracement level, right? So I entered this trade like this with an entry order right on 0.382 Fibonacci. We'll talk about this in more detail in the next lesson. And then this trade was captured, simple play, down to the 4 hour 50 EMA area for 2.5%. Pretty straightforward, right? So that is what an IBO looks like. We're catching the beginning of the run, right, on a higher time frame, and the beginning of a trend on a lower time frame. So beginning of a run or a pullback on a higher time frame, beginning of a trend on a lower time frame. That's kind of it, right? So with that said, in the next lesson, we're going to be focusing more on the execution, but this is the basis of it. So that's it, right? It's pretty simple. The IBO strategy, it's not complex. It is a simple strategy. And the main characteristic literally of it is the break and retest. The initial, right? The first break and retest of that 1 hour 50 EMA and of that 0.382 Fibonacci retracement. That is what the IBO is. It is the initial breakout. That's what it's called, the initial breakout. So again, we're focusing on the wave 1 breakout, wave 2 pullback, that's retesting that 1 hour 50 EMA. So that's it for the explanation of the initial breakout. In the next lesson, I'm going to show you how to actually execute this trade, how to get into it, where to take profit, where to place your stop loss. So that is it for this lesson. I'll see you in the next one.